Hey guys, hopefully everyone is doing well. Today's target is to solve question number 7, and the number which is appearing is 17. As I have told you, we are collecting these questions from different books. Some of them are from foreign books and some are local books, so that you can understand the concept of adjustment in financial statement correctly, efficiently and quickly. Our target is to understand financial statement, which includes profit loss statement and balance sheet statement. As usual, we have elements present in trial balance. Why I am calling it as trial balance? You can see that debit balance is present on left side. On the right side, you can see this heading, credit balance. So credit balance is present separately. Although total of both sides are not given, but since debit and credit are given separately, so we can call it a sort of a kind of trial balance. On the other hand, this is second part of the question. These are different adjustment. Right now we will be solving 9 adjustments present in our question. So first part of the question would be to solve adjustment, then we will enter these elements present in trial balance. I'm sure that you people have understood this brief introduction of the question. So we are ready to solve our question. Let's begin. As I've told you that adjustments would be the first step. So we are solving adjustments earlier than amounts present in trial balance. First adjustment is saying closing stock. This is part of cost of goods sold. Here you will start with opening stock, then you will add purchases, and then you will see if returns are present, after which you will subtract closing stock, and this closing stock is present in your question, amount of which is 43,200. Write down. As you know that all elements present in adjustment do have double effects, so closing stock we are now going to write on current asset side. This way two effects of this adjustment has been completed. 43200, this was first closing stock. Now second is 3/4 of the rent related to factory. Very interesting. You know that direct side is related to factory, so over here you will write rent for the first time because it is said that 3/4 is factory rent. So 3/4 multiplied by total amount of rent. Now we will be looking forward for the rent. Here on debit side it should be present. Okay, we have got rent 12,000. So what you will do, you will take 3/4 of 12,000 amount. Why we are doing it? 12,000 was amount of rent, and 3/4 is said to be related to factory. So 9,000 is related to factory. Look at here, 3/4 of rent related to factory. So where remaining rent will go? You will go to operating expense side. You will write rent. 1/4 out of total, 3/4 is related to factory. So 1/4 would be related to operating or non-factory expenses. 12,000 was total amount of rent. You will take 1/4 remaining part of rent 9,000. Simple, you can see that out of 12,000, if 9,000 is for factory, remaining 3,000 would be for non-factory, non-manufacturing expenses. In this way, second adjustment has been completed. Now third adjustment is depreciate machinery. Over here, you will go to operating expenses and you will mention depreciation, and this depreciation is for machinery. Just to save the space, we will just write machine, MACH, and we need to take 10%. Let's see how much amount of machinery is. So this is machine, amount of which is 64,000. So you will be putting 64,000 and you will take 10% of value of machine. What is 64,000? It's value of machine and it is set to take 10% depreciation of machine. First effect is completed. Now we will go to fixed asset side. Here first you will mention amount of machinery was 64,000 and 6,400 is depreciation which is needed to be subtracted. You can see that depreciation was 10%, amount of machine was 64,000 which we have mentioned over here, 10% depreciation, and you have calculated this depreciation over here 6,400, and finally we will subtract it. Guys, in this way our three adjustments are completed. Number 4 adjustment, it is just similar to second adjustment. 4/5 of water and electricity relates to factory. So here direct expenses, water charges, to save the space we will write just water. It is actually water and electricity. Now look at here, this is water and electricity, total amount is 20,000, but only 4/5 we will take. Amount of water and electricity is given 20,000. So write down 20,000 and you need to take 4/5 only, which is related to factory. Once again I am telling you what you are doing, 4/5 related to factory. 20,000 was total amount of water charges and you will multiply it with 4 and divide by 5 so that water charges related to factory. Now common sense, remaining part would be related to non-factory expenses. So here you will write water again, total water was 20,000, 4/5 part, at here you can see 4/5 part is related to factory. Then how much remaining? 1/5. This would be related to non-factory expenses. And here you will calculate total amount of water charges, then multiply by 1 divided by 5, you will get 4,000. In this way, out of 20,000, 16,000 related to factory and 4,000 related to non-factory expenses. In this way guys, we have completed fourth adjustment. Now fifth adjustment, investment market value is 42,000. We will see how much value of investment is present in your question. Here investment is not present, so we'll have to search amount of investment. Look at here we have investment, amount of investment is 40,000, this is original amount, and at the end of question we will see what we'll have to do. 42,000 is market value of investment. Alright guys, now number 6, raise provision for doubtful debts 5% debtors. For that purpose we will go to operating expenses. There you will write bad debt as first step, then you will add additional bad debts, then you will add new provision for bad debts, and then you will subtract old provision for bad debts. These are 4 elements related to bad debt adjustment, but first effect would be in current asset side. Here you will see how much sundry debtors are. We will search from in the trial balance sundry debtors. Okay, at this side we don't have sundry debtors. At downward side they are still not visible. Let's search one by one. We do have Debtors. All right, we have got the amount of debtor 160,000. First effect or first step is to put 160,000 over here and 43,200 was supposed to be written over here. Next step is to subtract additional bad debts which should be present in adjustment, but here you can see that nothing is visible or available additional bad debts, so you will write 0. Then you will subtract new provision and you will have to calculate this new provision as usual, because provision is required to be raised up till 5%, up to 5%. All right, now this is amount of debtor in absence of additional bad debts. You will take the same amount because there are no additional bad debts. Then you will take 5%. Here total amount of debtor 160,000, then multiply by 5 divided by 100 to get your 5%. So two elements decided, there are no additional bad debts, that means 0, and new provision we have just calculated, that is 8,000. Write down the amount. It means our adjustment has been completed. Both effects for new provision for doubtful debts has been completed. Next, factory manager commission is 1% of gross profit. Gross profit is still to be calculated. So here you can write manager commission, and what you will have to do, GP gross profit multiply by 1 divided by 100. This is required to be done. And since you haven't calculated your gross profit, for that purpose you will wait. Next is general manager commission 5% net profit after charging. Yesterday we have understood it, but mainly I can repeat the procedure. You will have to wait for calculation of net profit. Look at this. It is 1% on gross profit and this is 5% net profit. Both gross profit and net profit is still to be calculated, so we will wait. Accrued dividends 800. Dividend is your income, so you will go to your operating income side and here dividend received actual, you will add outstanding dividend which is described over here. Accrued means outstanding 800, so you will write 800 over here. I'm sure you have understood. First effect is completed, outstanding income. Second effect will be in current asset side. Here you will write outstanding dividend, amount of which is 800. All right, have you seen that all adjustments we have completed? Accrued dividend was the last adjustment. Now we will focus upon our elements of trial balance. First is drawings. Drawing is part of fixed liability. For that purpose you will go for capital, then you will subtract drawings and you will add your net profit. Right now we are related with drawings. How much amount of drawing is 20,000, so it's not adjustment, that is why there will be only one effect. Drawings 20,000 would be subtracted. Now we will see what is next. Debtors, I think we have already written 160,000 amount of debtors. Look at this. After debtors we have interest on mortgage loan. Secondly, you will have to see if mortgage loan is present. Look at this, loan on mortgage 72,000, interest on mortgage 2,400, which is your other expense. Here you will write interest on mortgage which is 2400. Since it's not in adjustment, so we will be having single effect. Cash in hand, your current asset. Here you will mention cash in hand, amount of which is mentioned over here 800. Again 800, that's little surprising. Outstanding dividend is also 800 and cash in hand is also 800. Opening stock 32,000. So guys, here you will come and write opening stock over here, amount of which is 32,000. Just write down. After opening stock, we have machinery 64,000. I think we have mentioned it. Machine 64,000. That's good. Then we have cash at bank, which is your current asset. So here, cash at bank, I think amount was 20,000, and we will confirm again. Cash at bank 20,000. All right. Then we have building 96,000. This is your fixed asset. Here you will write building because building is your fixed asset. And next step is to see how much amount of building is, that is 96,000. Just write down 96,000 over here. Building, okay. Then we have depreciation on the building. Look, it's very important. Normally depreciation is supposed to be present on, in adjustment side, it is present. In trial balance it would have only single effect. So depreciation on building would be written in operating expenses only. So let's write depreciation on building. This is 2000. All right. After depreciation we have bad debts, and as you know, we have already mentioned it, bad debts were 4000. Write down over here. Look, these were bad debts 4000, and you have mentioned purchases 562 400. 562 400 amount of purchase we have written. All right. After which we have written purchases, need to write down next. Sales return 59,200. Here you will mention amount of sale, then returns, and amount of sale return 59,200. Alright guys, returns have been mentioned and written. These are sales return. Then wages 80,000. Okay, direct expense. Here you will mention wages, amount of wages, it's 80,000. So here you will write 80,000. Okay, these amounts are supposed to be written on second column, so just raise these. Wages 80,000 completed. After wages we have salaries, part of operating expenses. Salaries were not mentioned before. Now here you will write salaries, amount of which is 48,000. Dear students, please note it down. You need to have a good, cool, calm behavior towards these questions. Long questions, when you have to solve, your calmness and patience, focus, very important. All right. After salaries, we have carriage. When carriage is not mentioned as it's in or out, you will suppose it carriage as direct expense. Okay. So here you will write amount of carriage is 8,000. Write down over here 1,000. Okay, what this 9,000 is we will see later on. And I think we need more space because another direct expense, factory expenses 48,000 is present. So let's make little more space over here. Factory expenses are needed to be written on direct side. For that we have made the space. Here you will write factory expenses, amount of factory expenses 48,000, big amount, 48,000. Alright, as you have seen that this left side is completed, last amount was factory expenses. We will now focus upon right side, insurance, part of operating expenses. So here you will write insurance. We will see how much amount of insurance is given, and that is 4800. So you will mention 4800 over here. After insurance we have general expenses. General expenses are also part of operating expenses. Let's see how much amount of general expenses, that is 29,200. So here you will mention 29,200. Okay, after general expenses we have discount. Since it is written on debit side, so discount would be considered as other expense. So here you will be writing discount, amount of which is 3,200. So here you will mention 3,200, discount is written. After which rent, water, electricity, this has already been written. Rent and water, electricity. Water is written, rent is written. Okay, the next step is to write investment 40,000. Let's put 40,000 of investment over here. We will adjust its market value later on because it's dependent. After investment, we will now proceed to our credit side where dividend received 2,000, operating income. Here you will write amount of dividend received, and this amount is 2,000. Mention over here. Dividend received, then we have discount. Since it is written in credit balance, so discount would be operating other income. So you will come over here and will mention discount. Amount of discount received is 2,000. Write down over here. Okay, then we have return. Since these returns are written at credit side, so it means these are purchase return 40 to 400. Okay, 4 to 400, we have already left a space for returns. After return we have sales 883 200. 883 200. Let's see again to ensure 883 200, 883 200. So sales, okay. Then we have provision for bad debts. At this stage, look at here, provision for bad debt. These are old provisions This is old provision 5600 and we have already made a space. This is for old provision 5600. Okay, 5600 old provision loan on mortgage fixed liability. Here you will mention mortgage, amount of which is 32,000. Just write down 32,000 over here. Okay, after loan we have creditors. It's part of current liability. Here, creditors, and the amount is 80,000. Put 80,000 in front of it. So the last amount is capital 266,000. So here 266,000 capital is written 266,000. Okay, what we have done is all adjustments except these two 7 and 8 and all elements of trial balance except this investment. We have written everything because they are dependent upon their gross profits and net profits. So first step is to calculate our gross profit. For that, this was amount of sales less is return. Net sales are present. Now we will calculate first part of cost of goods sold, opening stock, opening stock, then you will add purchase less returns, bracket close, and less closing stock. So we have cost of goods sold. Final amount of cost of goods sold we will be writing over here, where you will take sum of all direct expenses and first part of cost of goods sold. This is grand total of cost of goods sold, and you can see that 154,200 is your gross profit and gross profit is solved. Secondly, we were waiting, look at here, gross profit, we were waiting to calculate 1%. 154,200 we will be writing over here, 154,200, and you will take 1% of it. Why we are doing it? Once again I would remind you, look at here, factory manager commission 1% of gross profit. So that is why you are calculating this 1%. How? 154,200 was gross profit, multiply by 1 divided by 100 is manager's commission, and this manager commission was not mentioned in trial balance, so you are going to write it on liability side because it's still payable, amount of which was 2,000. Write down the amount. So factory manager commission is also written. Now please note it down. General manager commission is still to be written because that is completely dependent upon net profit. So first step is to calculate dummy net profit. Okay, then we will calculate general manager's commission. For that purpose, let's start our calculations. First, bad debt adjustment. Bad debts plus additional bad debt 0 plus new reserve minus old reserve. We'll have to see plus new reserve minus old reserve. So guys, in this way bad debt adjustment has been completed. Then you will see any other adjustment which is still present. No. Okay, dividend received, outstanding dividend, it should be added. 2000 was original amount of dividend, outstanding 2800. There was only one amount, so you are going to write same amount over here. After which we will see there are two other expenses, 2400 interest and 3200 discount. Then finally other income, there is only one, that has also been completed. So guys, have you seen that all four elements we have completed? Now it's time to calculate our gross profit, net profit. For that purpose, this is your gross profit. Let's begin with it. First we will take gross profit 154200. Then you will subtract your operating expenses and amount of we haven't calculated total amount of operating expenses, so here you will calculate total amount of operating expenses. Yes, so total amount of operating expenses is also calculated. We will now apply our procedure for calculation of net profit. Guys, I have just seen that this is dividend received 2000 while amount of discount was 4800, and typographically we have written discount as 2000 while it was 4800. Okay, I'm going to let you see again. That is why I'm saying that when dozens of amounts are required to be entered, focus is very important. And what happened, this is dividend received and by mistake it was read as discount received. Amount was 4800 for discount and it has been mentioned 2000. Although it's human error, but we'll have to be very careful. So what I have done, instead of this 2000 we have mentioned is 4800. Okay, so now we will be performing our last step of adjustment which we were waiting for, that general manager commission 5% on net profit after charging. So what you will do here, general manager commission, and you will calculate amount of commission. How? 50858. This is your dummy net profit. That means without calculation of general manager commission, 50858. So what you will do, 50852 multiply by 5, since it is after charging, so divided by 105. So here you have got your general manager commission, and you can see that our net profit 48436 and net profit what we have calculated 48436. As you can see that we have taken all the amounts, that is why 48436.4. So our book has perhaps not taken that amount 48436 and 48436. Why these decimals? Because calculation of general manager commission had made it like this. 50852. Let's confirm this amount. 50858. Okay, let's calculate it again because decimals were not 858. Okay, now multiply by 5 divided by 105. Now, yes, now it is accurate. 48436.19. It may be called as 0.2. Now we are okay. So here, second effect of general manager commission. which we have just calculated, it may be called 2421.80. Okay, 2421.80. So this has been calculated. General manager commission. Next step is to add your net profit, and this net profit you have just calculated, that was 48436. This is also calculated, and you may write it 48436.2. 48436.2, round off. Look at here, once again I'm telling you, this was 48,436.19. So what we have done, 48,436.2, just rounded it off. Okay, it's time to calculate our amount of capital. So here, amount of capital, then you will subtract drawings, then you will add your net profit. We have got total amount of capital, interest on mortgage, the loan on mortgage, this was fixed liability 32, and amount of final capital amount, fixed liability completed. It's time to calculate current liabilities. You will take sum because there are three amounts included in current liabilities. There is no reserve. Okay, so here we will be calculating our liability side, and let's take the sum of, look at this, reserve, and then current liabilities, and this amount of fixed liability 410,858, 410,400. Okay, we'll have to see. Now first we will complete, then we will be coming back to this fixed liability. Once again we can, 48436.2 was your net profit, 48436.2. Drawings would be subtracted. Have we done the same? Once again we can check it out. This was amount of capital, then you need to subtract drawings, and then you will add your net profit. Okay, loan on mortgage is similar, 410,858, and have we general manager 2421.8. okay, factory manager commission is 2000. Let's check it out. I think this is not like that. Oh, this was 1542. So let's change out 1542. Okay, now we will take its sum again. Sum of these three amounts. Current liability is completed. Let's take sum again. These are current liabilities. These are fixed liabilities. So what we have, 410,400. This is your balance sheet, 410,400. And let's see our answer, 410,400. This has been completed. Now here what had happened, there were two typographical mistake. Once again I'm telling you, acceptance of mistake is very important. Look at here, the amount of discount received was 4800, and due to this printing effect we have read it as discount. It was dividend receipt, So amount of discount was 4800. This was first mistake. And secondly, we have calculated factory manager commission. Look at here, factory manager commission was 1542. Instead of 1542, we have seen it as 2000. So that was changed over here. Factory manager commission, here 2000 was written. So instead of 2000, it actual amount was 1542. We have replaced it 1542. In this way, our balance sheet liability side has been completed. Now we will focus upon our asset side. I hope so that all amounts are correctly written. Here first we will calculate net amount of machinery by subtracting depreciation. Net amount of machinery is calculated. There is no other fixed asset, so we can calculate our total amount of fixed asset 153600. That has been completed. Okay, then we have closing stock and debtors. This was original amount of debtors. You need to subtract additional bad debts which were not present. Now subtract new provision. Final amount of debtor is here. We are now open to calculate our amount of current assets. This has been calculated. Investment, same 40,000 we have written, and you can see that we have got our answer for asset 410400. Exactly same 410400. So you can see that dozens of amounts were written, but just losing focus upon two amounts can get time. Look, it was very easy to edit this lecture, and I could remove the part where that wrong amount was put. Why I am not removing it, why it is direct lecture? Because you will have to understand that if this happens in your paper, how quickly you should pick the mistake and rectify it and get your answer. So once again I'm telling you that this manager commission was 1542. Now look at here, instead of 1542 our eyes gone to 2000 and we have written here 2000. This was first. And secondly, instead of discount received, we have taken amount of dividend received. Look, it was a sort of mispresentation of this view, but anyhow quickly we have rectified those two amounts and got our balance sheet equalized to our answer. So there were four parts. I am going to zoom out. Here were your four parts. Look, this was your indirect side, this was your liability side, and this was your direct side and asset side. 410400 and 410400 balance sheet is equalized. Answers gross profit net profit match. In this way this question has been completed. After completing this question, I am suggesting you to please focus upon practice of this question. Please repeat this question for 3-4 times. After repeating it, I'm sure that you people will understand each and every step of this question quickly. Even then, after practicing, if you see anything difficult, you are very welcome to share your problem through messages, text, or you can directly contact to express your problem. I will be humbly trying my best to quickly answer your problems. So it's time to end our lecture. Thank you very much for your time. It's time to say goodbye. Allah Hafiz.